Whales are dumping their stocks and die-hard investors are locking up their positions. Ethereum is breaking out through spot trading. Is the market a healthy bull or a new round of trap? Whales are selling $570 million worth of assets to digest, but are Ethereum still facing concerns? $1 billion deposit rejected. Account emptied in 20 days. Trump angrily criticizes Wall Street. With crypto giants collectively placing bets, is the Solana ecosystem poised for an explosion? Can Kazakhstan really make it from the world's second-largest mining country to a national cryptocurrency reserve?
Tuesday, September 9th, BitcoinTV Chinese channel. Where is the coin chain? I'm Michael. First, let's take a look at the 24-hour cryptocurrency headlines. Whales suddenly dumped their holdings, sending Bitcoin holdings plummeting below 3.36 million BTC, and the 30-day rate of change also turned negative. Looking at the chart, the recent price correction coincided with whales reducing their holdings, exerting direct pressure on the market. As of 12:30 p.m. today, Bitcoin was fluctuating around $110,000, still down from its previous high, putting short-term pressure on the market. If whales continue to sell, key support levels may be tested in the short term. But don't panic, this could simply be a temporary profit-taking, a shakeout to clear the way for the next rally. Three key factors remain. First, can funds quickly return during the correction? Second, can spot buying sustain? And third, will there be a surge in long liquidations in the derivatives market? Now is the critical turnover period. Whether it will fall further or accumulate strength for another surge depends on how the funds express themselves. The latest data is quite interesting. Bitcoin's cumulative addresses have been surging. As of September 5th, they have accumulated over 266,000 Bitcoins, setting a new all-time high. Accumulation addresses are defined as die-hard holders who only invest in and never sell. They have bought at least twice but never sold. These individuals are typically long-term investors, including institutions, corporations, and some influential individuals. What does this indicate? With locked-up holdings, market liquidity is reduced, creating an invisible floor for prices. Historically, a surge in cumulative addresses has typically coincided with periods of market undervaluation, often followed by stronger performance. While short-term fluctuations will likely persist, this long-term buying power is providing Bitcoin with an invisible safety net. Ethereum's recent surge to $4,900 was largely due to a lack of bullish activity, driven entirely by spot buying power. At its peak in early 2024, the funding rate soared to 0.08, and the market was heavily leveraged, leading to a rapid price peak. By the end of 2024, while Ethereum had returned to its highs, the funding rate had significantly cooled. At its latest peak in 2025, Ethereum reached a new high, but the funding rate remained moderate, indicating that the market was not driven by all-in leverage, but rather by spot trading. The upside is reduced volatility and the risk of a crash. The downside is that demand is still weak, and further upward movement will require additional capital and confidence. In other words, Ethereum is evolving from a leverage bulldozer to a spot engine. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining communities within the past 24 hours. Click the bell to join our channel and become a member. You'll receive your membership code Monday through Friday. Ethereum has been on a tear lately. Having just touched $4,957 at the end of August, the on-chain stablecoin supply has quickly soared to a new high of $165 billion, seemingly sizzling. However, a closer look at the fundamentals reveals a booming on the surface, cooling down underneath. August revenue was only $14.1 million, a 44% drop from July, and gas expenditures also decreased by 20%. In other words, while price and adoption are soaring, revenue and on-chain activity are stalling. This fluctuating data is leaving the market confused. Is this short-term noise or a potential source of concern?
Data shows that stablecoin circulation reached a new high of $165 billion, and the price of Ethereum hit $4,957 on August 24. However, the monthly burn fee was only $14.1 million, a sharp drop from $25.6 million in July. Gas expenditure also fell from $49.6 million to $39.7 million. While prices and adoption rose, revenue declined significantly, indicating a significant weakening of the Ethereum mainnet's profitability.
Because it's just so broadly capable, it is going to be the natural evolution of the internet protocols in the World Wide Web. It is going to be the main functional components of Web3, the re-decentralized web. We like to think of Ethereum as a new kind of software, trustware, and we like to think of trust in a new way as a virtual commodity, where Ether is the highest octane trust commodity in the world.
On-chain profitability has slowed, but the capital market continues to aggressively invest in Ethereum. For example, the public relations firm Etherealize secured $40 million in fundraising in September. Coupled with ETF applications, staking lockups, and buybacks, the short-term supply of circulating chips has tightened, stabilizing the price. However, the problem remains that $570 million in whale selling pressure remains to be absorbed in the third quarter. Even more surprising is that, upon the WLFI airdrop on September 1st, gas prices soared by over 1,000%, sparking both excitement and concern in the market. After all, such occasional highs simply cannot sustain long-term revenue. In early June, Trump went on CNBC to reveal that JP Morgan Chase and Bank of America had given him 20 days to close his decades-old bank accounts for political reasons and flatly rejected his $1 billion deposit application. This news sent shockwaves through the U.S. financial world, with reputational risk quickly becoming a buzzword. Ultimately, this debanking movement has exposed some of the lesser-known practices of the U.S. financial system. The question is, who is closing these accounts, and who is footing the bill?
U.S. financial regulators are stepping up efforts to curb debanking, the practice of banks arbitrarily closing customer accounts for non-financial reasons such as politics or religion. Against this backdrop, Trump directly singled out JP Morgan Chase and Bank of America, accusing them of refusing to accept large deposits or closing accounts linked to him personally or politically. Trump did not provide specific evidence, and the two banks declined to comment. This incident highlights the intertwined nature of the debanking debate in the U.S. financial and political spheres.
Trump is truly furious this time, bluntly questioning whether banks are selectively closing accounts based on political affiliation. He also, as president, ordered the OCC to crack down on these exit practices. However, Reuters poured cold water on the issue, stating that public complaints haven't been frequent in recent years, so how could this be a widespread phenomenon? Coincidentally, the Trump family's recent involvement in the crypto space has led to numerous bank denials, prompting speculation. Is this a case of banks deliberately cherry-picking their clients?
A 5% discount cannot stop a 23% increase. Will Ukrainian retail investors buy into it or run away? Global crypto trading volume surges, India wins for 3 consecutive years, and a dark horse emerges in the Asia-Pacific region. The three giants join forces to dig deep with $1.65 billion invested. Can the Solana ecosystem burst? Seizing assets as startup capital, is Kazakhstan's reserve dream reliable?
In the cryptocurrency world, hoarding has become almost standard. After strategy transition to Bitcoin, it seemingly unleashed a massive hoard, amassing 461,000 Bitcoins worth over $48 billion at current market prices. BNB is also not alone. Nanolabs has been increasing its holdings to 128,000 Bitcoins, while CEA Industries even partnered with HKEX Capital to raise $500 million in a private placement, establishing a BNB chain listing treasury and hoarding over 350,000 BNB. Recently, this hoarding trend has spread to Solana, and the stockpiling war in the cryptocurrency world is becoming increasingly heated.
Nasdaq-listed Forward Industries has secured $1.65 billion in cash and stablecoin investment commitments to launch its Solana funding program. Investors include Galaxy Digital, Jump Crypto, Multicoin Capital, and existing shareholder C/M Capital Partners, creating a strong lineup.
I think we're still processing more transactions than basically all the other major chains and L2s combined per day. It's pretty crazy that, like, 5 years since launch, with everything being open source, our ideas all being totally open, anyone could go copy this thing. No one has really kind of been able to go fork Solana and compete with us.
Forward stated that it will build a publicly traded institutional investment platform, deeply investing in the Solana ecosystem to achieve long-term value growth. Galaxy Digital will be responsible for fund management, trading, lending, and staking. Jump Crypto will support infrastructure through projects such as Firedancer and Double Zero, and Multicoin Capital will provide strategic and governance guidance.
As early as the end of August, Bloomberg leaked that the three major crypto giants were preparing a major move. Surprisingly, the protagonist was Forward Industries. By comparison, their smaller operations seem minuscule. Upexi holds 2 million SOL. A DeFi company only claimed to have 1.29 million SOL in August, and in July, mining company Bitmining was still raising $200 to $300 million for SOL Vault. But compared to Forward's $1.65 billion move, it pales in comparison. To put it bluntly, the crypto giants are truly invested in Solana. As their strategies gradually take shape, the Solana ecosystem is likely to produce even more blockbuster projects. Let's wait and see. Kazakhstan is no stranger to the cryptocurrency world. When cryptocurrencies first took off a few years ago, the country, thanks to its low electricity costs and relatively relaxed regulations, quickly became a prime location for Bitcoin mining. At its peak in 2021, 13% of the global Bitcoin hash rate came from this region. Later, it went a step further, launching a cryptocurrency exchange pilot program within the Astana International Financial Center, attracting even Binance to participate. Trading volume is projected to soar from $324 million in 2023 to $1.4 billion in 2024. The country also plans to issue a stablecoin using its own fiat currency, the tenge. Recently, the country has begun considering embracing the trend and developing cryptocurrency reserves.
Bitcoin.
Cryptocurrencies.
Within 2 years, Kazakhstan has become second only to the US as a global leader in Bitcoin mining, the complex technological process that powers this digital money.
There's no place that symbolizes Kazakhstan's crypto boom more than this.
Kazakh President Kassym-Jomart Tokayev announced a strategy to advance artificial intelligence and digital assets, including a national cryptocurrency reserve. He called for the swift development of a digital asset ecosystem and instructed the Financial Market Regulation and Development Authority to complete legislation by 2026. The specific plan involves establishing a national digital asset fund, backed by the National Bank Investment Company, to reserve high-potential digital financial assets as a strategic reserve.
Kazakhstan is not the first to establish a national cryptocurrency reserve. US President Trump has already signed an executive order to establish a reserve for Bitcoin and other cryptocurrencies, and Brazil and Indonesia are also eager to take the plunge. 2 months ago, reports surfaced that the Central Bank of Kazakhstan was planning to use seized digital assets to raise initial capital, a move now officially endorsed by President Kassym-Jomart Tokayev. Even more interesting, in May of this year, he announced plans to establish a crypto payment pilot zone, specifically in the city of Alatau, where 52,000 residents would be able to use cryptocurrencies for groceries and coffee. Whether this initiative will actually work depends on how Kazakhstan reacts.
Ant Digital Technologies, a subsidiary of Ant Group, recently made a big move to move energy infrastructure worth $8.4 billion to the blockchain platform AntChain. The U.S. Congress has introduced a bill, H.R. 5166, requiring the Treasury Department to quickly come up with a plan to manage the Bitcoin purchased by the federal government, including the so-called strategic reserves. Canaan Technology mined 98 Bitcoins in a single month, bringing its total inventory to 1,547. Regarding hash rate, the current installed capacity is 8.6 exahashes per second, EH/s. If all of its equipment were online, the total hash rate could exceed 10 EH/s, effectively putting the mining farm at full capacity. Washington, D.C. Attorney General Brian Schwab sued the Bitcoin ATM company Athena Bitcoin on the grounds that scammers used its machines to cash out, but it still charged fees and made money from scams targeting the elderly and vulnerable groups. On September 9th, gold prices soared to $3,650 per ounce, a slight increase of 0.4% for the day, setting a new all-time high. It appears that this wave of gold prices has been a steady but surging rise.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.